Hi there, Serial Trader here. Let's check in with the major US indices. Alright, starting off here with SPX. Just looking at our Elliott Wave short-term picture. So I'm quite confident in now labeling this as at least a short-term top. Okay, nice 5-wave sequence that counts as complete to the upside. Now we've had a good reversal downwards. And expecting something along these lines, some sort of corrective decline. And at this point, still unknown what exact form it will take, as there's so many variations of corrections. But if we just go in closer, on the 15-minute, say, and zoom in a bit here, it looks like we could easily make the case for some sort of a one down, two up, 3, 4, 5. So it looks like we have a 5-wave sequence to the downside completed. And now we're having some sort of what looks to be a corrective bounce, corrective advance. Okay, so 5 down, looking for some sort of variation of a 3 up. And then following that, should have another 5 down. And I mean, this is pretty choppy so far. I could easily just keep chopping up more near term here. Nothing to say it's done going up. And we'll just throw down some fib levels to be looking at. So since I believe we have a completed 5-wave down here of a small degree, do a fib retracement of that. So far we've done about a 50% retracement of that. Now that would be satisfactory for a wave 2 or a wave B retracement. Although nothing to say we couldn't dig even deeper, or in this case higher, and go to the 618 or even the 786 would be acceptable, although that's getting quite deep. Certainly seen that before. So that's kind of what's going on real near term here. If we get back out to that hourly, I'd be quite comfortable. Quite comfortable labeling it tentatively as we have an A down complete. A or 1 at this point. We'll put A, since I'm favoring that this is just a corrective pullback, not the beginning of some major impulse wave down. No reason to believe that yet. And maybe we're working our B up here, and then we'll be looking for perhaps a C down, and maybe down to the previous 4th wave here. That'd be a reasonable target, and that'd be similar to the probably equality relationship between A and C, just kind of eyeballing it here. So roughly that's what can be expected here. So maybe a little bit more up, but then should have another short-term wave down here fairly soon. All right, we'll switch over to the candlestick chart. Check in on that. And okay, SPX. So we had our bearish engulfing on Friday. And then yesterday we had another negative day of trading and a close below the T-line, so decent follow through. Today we've had a bounce up, but largely rejecting those higher prices. Nice upper shadow on the candlestick, and basically just closed right at the T-line. So at least a pause in this little short-term downtrend. I mean, typically these pullbacks are a little more time-consuming than this after having such a good run up. So I would expect just once this bounce is complete, have another leg lower, as illustrated on that wave chart there. And okay, we'll go to the Dow Jones Industrial Average. And okay, what have we got on the Dow? So the Dow still showing a little bit more relative strength. Didn't even get down to the T-line here, but also still rejecting these higher prices with that upper shadow. So I would imagine if there's further pullback on the S&P and also the Nasdaq once we get to it, the Dow should follow suit, even if it is relatively stronger and doesn't drop as much perhaps on a percentage basis. Okay, and looking at the Nasdaq Composite. So a nice bearish engulfing on that on Friday. Good follow through, well below the T-line. Now we're still well below the T-line. We've basically just done a doji star here on the 50-day simple moving average, And we're also just sitting right on this longer term Elliott final channel that's containing this impulse wave off this contracting triangle. So if we lose that decisively on a closing basis, this could lead to more severe weakness, at least in tech. And tech's a pretty big sector of the market, so that would certainly have bearish implications for the S&P and to a lesser degree the Dow, but still somewhat to the Dow. So Nasdaq looking the weakest here. That's sitting basically right on a couple different support things, you know, 50-day simple moving average and also this price channel that it's found support in up until this point. And the oscillator certainly falling down, but not in the oversold territory yet, so that leaves the door open for more downside, at least short term here. Okay, and look at the VIX. VIX is the one thing that's really not lighting up here, which leads me to believe this is likely just a larger, or not a larger, but a more minor corrective move down as opposed to something real nasty and trending to the downside, because VIX still just has remained fairly subdued. Right now it's just in the 12s. It only went as high as low 14s, which is still quite low. But the thing is, if things really start breaking down in the equities and VIX really starts picking up, that could imply significantly more downside. But right now that's just not what's being illustrated here. Alright, should be good. Check in later in the week. Serial Trader signing off.